Hello, everyone. Happy Wednesday. How's everyone doing today? Let's see here. Let me move a window around. There we go. Good morning, John. Good morning, Bull Strike Cheetah. Good morning, Patrick. Well, a lot of people in the background, but not a lot of people in the chat. Sterling will not be here today, by the way. So good morning, David. Just a reminder tomorrow, if something happens and we get major movement, like overnight or something happens with the Iran Israel war, then and the markets react, then I will do a live stream tomorrow. You'll just have to watch it YouTube. If not, if everything's quiet, we have the Fed today, and we don't, and we are stuck in this range, and there's nothing really going on, then I will not have a live stream tomorrow. So, because there's really my outlook, the markets right now, there aren't a lot of good setups. There, from the way I analyze stuff and what I'm looking at, there aren't a lot of good setups. And we have Juneteenth tomorrow, futures limited trading, bunch of stocks closed. And Friday is quarterly OPEX. Okay? And once that's out of the way, we got a lot of stuff over the next couple of days where we can have some volatility, but we might not have great setups. So, I mean, if you're buying or selling vol, you can be doing stuff. But other than that, markets aren't really moving that much. So, I mean, silver actually invalidated the double top, and again, wouldn't have sold that anyways. Would be looking at that for pullbacks. Silver's looking a little toppy, but again, back to the rotation zone could be another great buying opportunity. Oh boy, come on. Why does that jump around? There we go. There we go. That's one feature I can't stand with Apple's. When you have multiple monitors, you hit an area on the screen and it moves the bar. Good morning, Heinrich. Good morning, Tony. Hello, Charles. Hey, Harold. How are you doing? Good morning. Hello. Good morning, Jacob. All right, now we're getting some people jumping on in. So we'll look briefly at the markets, but I am literally not doing much until we get through this week and through OPEX. Looking for potential stock setups, looking for stuff, especially going into next week. Mortgage stuff came out this morning, a little drop in mortgage rates. Housing starts came out. Jobless claims coming in with consensus, a little drop from prior, nothing big. The consensus a little higher for continuing jobless claims, but down from prior, nothing big there. We got the EIA numbers today. We have the bill auction, which would normally be Thursday, is today. The 4 and 8 week bill auctions. Those are always on Thursday because I know for rolling money in them, which are today. Fed, the big thing, we got the Fed pause, but it's what Powell says. I don't even know if that's going to move the markets that much. I mean, it's probably going to be we were going to wait and see. We don't have complete clarity on tariffs yet. You maybe mentioned something with oil being back up, and that could be inflationary in the future if it sticks around at this little higher rate. It's not going to be any, they're not going to shock the market with a cut or anything or a hike. So I don't know. We'll probably get some volatility off of it, but I think the bigger thing is everybody's watching if the U.S. is going to step into the Iran-Israel conflict. That is going to be more volatility from that. But that's where we sit. Good morning, Anissa. All right, so again, FOMC, pay attention to the press conference. The release is 2 p.m. Eastern, and then the press conference is 2:30. So far, pretty green across the board. Not big moves, but pretty green going into the open. The groups, let me just refresh this again. We have everything except healthcare is positive. Nothing major. I mean, technology is only up 30 basis points, but everything's positive. I'll say quietly positive. Again, 99.9% of a pause today, and then 85.5% of a pause in July. Still favoring the cut in September. Fear and greed back to neutral mode with the pullback yesterday. Schiller PE 36.55. Earnings, nothing. And then tomorrow, of course, Juneteenth, there's nothing. And Friday, we got the only thing I'm looking at is Roy Kroger. I'm more interested in what they talk about than what they release. All right. So, overall, as I said, there is not much going on. If we just look at the September contract, I mean, we're virtually unchanged from middle of May. So we're at the middle of June, middle of May. We've gone down a bit. We've gone up a bit. Holding the rotation zone on that. Holding the rotation zone on the continuous contract. I'm really only focused if we close below rotation zone. Then I'll start watching for the bigger pullback areas. And the bigger pullback areas based off the continued would be about 58.44. And, I'd be looking closer to on the just September contract, 58.68. So somewhere in here, somewhere in there. I'm using still continuous with the moving averages. They hold up a little better still on the roll. So, again, right now, key levels I'm watching into the open, about 60.53 to 60.55 is key resistance. Could turn into support, but not much. And even if you break above that, then we got about 60.70 still. Breakdown, we're looking at about 60.20 as key support. We break below that. I'm watching the roll open from Sunday night, right around 6,000. In the bigger picture, unless we start closing below the rotation zones, so far it's interesting on just the September contract. We're getting back to near cycle bottoms, still holding the rotation zone. And we still, even if we break the rotation zone, we have a lot of support lower. We have a lot of support lower still. So I would be personally will be looking still for, even though we're getting to a very toppy area, I'm still looking for potential buying opportunities unless we really get some downside volatility. NASDAQ, again, we're getting the cycle bottoms again, and so far we've held the major support level. If we start breaking below about 21,700, then I'll start watching for the bigger pullback. Then I will start watching for the bigger pullback. Intraday, key resistance is really right around here. Key resistance is right around 22,035. You break above that, you have another major resistance shelf at 21,115. You break below 21,955 roughly, then you have another support shelf down at 21,872. Major supports coming in at 21,738 area. So that's what I'm watching. Again, not going to be silly with this. If it does start getting above 22,200, that's another key breakout area. Another key breakout area. So, good day, Christoph. Dow, again, we have not done much. Look at this. We're virtually at the same level since Monday, May 12th. A whole bunch of nowhere. A little up, little down, but a whole bunch of sideways. Russell, key levels for me right now are 2141 as key resistance, 2093 is key support. Remember, when I say support and resistance, that's key resistance, so I'd be looking for selling opportunities against 2141 unless we broke above it. And then I'd start retargeting the 200 area. Key support, 2093, I'd be looking for dips into there unless we break that, retest and roll over, and then my major is 2041. So 2093, then 2041. VIX slightly elevated today. If the VIX starts breaking above this 2175 area, then I will sit up and take notice, especially if we get downside momentum. DAX, you still have a potential double bottom on the daily. Only on the daily. Okay, it's getting a little extended with multiple bottoms on the 4-hour. Daily, it's still, so I need to close above that. That's the only thing. Remember, we have the first cross rotation zone. So that double might never trigger. And he pops up. I'm still looking. We already popped up the key resistance around 23.5 and rolling over. If we break below 23.191, the potential doubles off the table. And my major target on a breakdown is 23.145, my first target. Yields, breaking down a little. But I'm going to more pay attention to how these react after the press conference today. Okay, because that will be telling, especially the 10 and the 30-year. Dollar index back to the rotation zone after a strong up move yesterday. Trying to really, it's losing downside momentum. We still have the major double. You can see now we have also a divergence down here. You can see the very clear divergence bouncing out of oversold again, with weekly cycles starting to turn up. So I'm going to be paying very close attention to the top of the rotation zone and then potentially this 98.80 level if we do break out. Other than that, on a pullback, I'm actually starting to look for any buying setups again. Conversely, in the euro triggered on the 4-hour basis a double top, which is another reason I'm looking for buying setups somewhere in the dollar and rollover setups now in the euro, because this is officially triggered 8, and this is not a major selling pattern yet. This is only a 4-hour, but we could easily see retracements to 114.26. 113.94. Those are my two key levels I'm utilizing first and foremost on 113.63. On the bigger picture, it's against the rotation zone. That's why I'm really focused on that first target first and foremost. But if we start breaking down over the next few weeks, then we still have the potential of massive double top in place. Hey, Jake. Yeah, uranium. We'll take a look at uranium. So, crude, technically, the double top is still in play. And now I'm watching this 4-hour rotation zone because crude, with all this uncertainty, is still climbing. I was hoping we were going to get a little pullback for more buying opportunities. This is another one that I would not short because of the instability in the Mideast. I was hoping for a little further pullback, but right now, technically the invalidation point is still 75.08. I'm paying attention to, in the short term, those 74.50 area on a closing basis. Natty gas. Natty gas, we had that key resistance. This is a perfect example. So we talked about this the other day. Breaking above 381. Closed above it. Okay? Pull back right to that, and now the strong rotation up. This was exactly what I was looking for. So that's the kind of setups. I've talked about those setups before. So you see how this was a very key level. Prior support, back here. Confirmed resistance, rallied up and then broke away. Confirmed resistance, confirmed resistance, confirmed resistance. Broke above that resistance, retested, and now getting the launch routine. So target 4.139 is my target. That was one of the better setups. Gold doing nothing. Silver coming up. Remember, this was not a look to short this opportunity. It was off the table now, though. So all I'm watching is any topping area in silver. Doesn't have to be today, but any topping areas I'm watching for pullbacks now into the daily rotation zone. All right, and silver is getting very overextended even on the weekly basis. That's why I'll be watching for some pullbacks, not shorts. Copper, still nothing. Platinum, continued back to the daily rotation zone, rotating up. But nothing else to talk about there. The yen, watching for another potential breakout play above 145.58. But we need to break out and then retest that as confirmed, turning resistance into support. We already looked at the euro. Spiders, we still technically have the daily double top on there. If we rotate up again, it's off the table. Right now, slight gap up from yesterday. So if we roll over, 597.53 would be to the gap fill. The double trigger would be a close below 595.48, but the rotation zone is still clearly in the way. On any rally, I'm looking at 601.50 is still a very strong resistance area. The Qs still has a potential double in play. Little gap up today, so I need to roll over a gap fill to 529.08. The trigger of the double with the rotation zone in the way is still 525.73. All right. Key resistance area is still right around 532.80 on a rally. Bitcoin, you still do have a potential double in play. The trigger point is 103.77. All right. Yeah, platinum is at recent highs. URA. URA. Let's update this. Let's look at the bigger picture. Because what do you see here on the bigger picture? Let's even go bigger than that. Let's go to the real bigger picture. What do you see here? We had a very key resistance over here, multi-area, a slightly lower resistance level, and prior, look at this. This was a very key support. We broke away and then confirmed that that key support zone held. And look where we are now. We're above this. So even if we pull back into this lower support zone, okay, looking for, this could be, again, a multi-year run. A multi-year run higher. I've talked about the uranium for years, and we're finally now getting the breakout play. What are my key levels higher? The key major areas I'm watching are about 47. I'll mark them off for you. Again, this is a long-term play, not a short-term scalp breakout. And will there be pullbacks? Yes. And still have to manage the position. But this is where I talked about trading around a core position, waiting for the breakout. What's happening now? We're breaking out. So very patient and lightening up from my perspective, and looking to add back on more on a pullback. All right. So, yes, can you still get big volatility drops in uranium? Yes, you can. Okay, and we are very overbought. Would I be shocked even to see us pull back to potentially 32? No, I wouldn't. Does that invalidate that long-term breakout? No, it doesn't, because of the volatility in uranium. So, there you go, Jake. So, personally, would I be, if you're not already long, would I be adding a ton up here? No, if you don't have any, I'd be a little more aggressive on the pullback. If you have some, this is something you could, this is where I would layer into it on a pullback. Can't give you specific trading advice, and you still have to manage a stop, although this looks from the purely chart perspective like, again, something that could be tradable and investable for longer than some people think. Hope that helps. How could it be played with options? You'd have, if you're playing it long term, I'd just focus on leaps. And I look at very key strike prices a lot farther out. That's what I do. I wouldn't even bother trading anything but leaps. So that's where you sit right now. Tesla. We talked about this pretty in depth yesterday. Talked about this. This is exactly it. I said for the possible front run, you start breaking down, especially below the 320 area. Look to lighten up at something on the reconnect with 87.5, and then if we do trigger the double, getting more aggressive to the downside. I need to really pay attention because of this channeling aspect of it. It could somewhat turn into a channel, so I'm paying closer uh, attention to the bottom of the channel. Yeah, there you go. If you're familiar, and if you're not familiar with leaps, they're just longer term options. They expire Januaries. Uh, that's something. And would I just leave it? Would I, back to uranium real quick? If I was going to play it, I'd spread it off. Okay. I do something on spreads. So the key levels I'd be looking at to the upside, I wouldn't just do naked buying, just buying naked calls. I'd construct spreads, because you can always trade in and out of the call option you're short. All right. But that's why I said I'd be looking, around. I'd have to call up the strike prices right now for the leaps, and I'm not going to do that during this. But again, another key level is right around 55, right around the 37.5 harmonic. Major level, if you're going a multi-year leap, like 70, that'd be that 50% retracement from the highs back in 11 to the lows back in 20. I consider that as an upper end strike. Or you know what you could also do? You could do something with, if you're familiar with condors, you could use 50 and 73, the 55 and 70 as two condor strikes, with the wings right around 85 and some wing down here. I'd have to really look at that for structure, but that's other things I consider. If, again, you want to do something, that would be, I wouldn't just be looking at the 06, the 2026 then, I'd be looking at farther out than that. Let's see, now let me get back to the daily. Again, nothing to talk about yet on Broadcom. A lot of things are coiling up. Nothing tech yet. The potential double top is off the table in this, but I'm still looking to see if things like NVIDIA trigger this wedge, especially if we trigger a wedge and break down below 141, then I'll start focusing more on a more substantial pullback in the markets. Other than that, the markets are just coiling, and I'm not excited to establish any bigger, massive positions until we get OPEX on Friday out of the way. We've really, because of all the stuff that goes into a quarterly OPEX, we got to free that up. So next week is when I'll really be focused on stuff, because we'll have the Fed meeting out of the way and we'll have OPEX out of the way. So we can really start to focus on, all right, what's post OPEX? What's the market telling us? With that, I'm about done for today. Again, tomorrow is Juneteenth in the U.S. And so if something major happens, there'll be a stream. If we're still just diddling around this area, if we get some volatility with the Fed meeting today, but there's no new major setups, I'm just going to take tomorrow off from live streaming. So just check to see if something pops up. I'll try to get it up earlier, for the warning, hey, there's going to be a live stream. And if you don't see anything, then assume that I am taking it off. And I will be back on Friday for options expiration. Everyone have a wonderful, wonderful trading day. I can't stress this enough. There's like some good setups if you don't trade the futures, though, like Natty Gas or something. There's not a ton of good setups in interest rates or the futures just yet. Not just yet, so don't force anything. Keep your powder dry for the good setups. With that, I will talk to everyone later. Bye for now.